Home prices don't usually collapse quietly, but in Pennsylvania, that's exactly what's happening right now. Welcome to 10 Pennsylvania cities where home prices are collapsing, worst housing markets in Pennsylvania. In today's video on the Globe Realty, we're breaking down the hard data that most headlines are skipping. Falling sale prices, rising inventory, growing price cuts, and buyer demand that's suddenly pulling back. This is an opinion, and it's not fear-baked. Every city in this countdown shows measurable warning signs, the same early signals that appeared before past housing downturns. Some of these markets looked safe just months ago. Today, they're flashing red. And here's the key. We're not just showing where prices are falling, we're explaining why. What's driving the decline, how fast values are slipping, and what it means if you're thinking about buying, selling, or investing in Pennsylvania in 2026. We won't reveal the cities up front. Each one is uncovered step by step, building toward the market that's deteriorating the fastest. So watching until the end matters. If you care about protecting your equity, avoiding bad buys, and staying ahead of the housing cycle, hit the like button, subscribe to the Globe Realty, and let's break this market down together. Number 10. Bethlehem, Pennsylvania. At first glance, Bethlehem might not scream collapsing housing market. After all, data from reliable housing trackers show that median home values here are still slightly up year over year, with Zillow reporting roughly a 3.0% increase in home values through late 2025, and a median home price around $344,000 to $350,000. So why does Bethlehem crack our top 10 Pennsylvania cities where home prices are collapsing? Here's the controversial truth. Aggregate citywide data masks deep micro-market weakness, especially in legacy neighborhoods and smaller segments of the market. In areas like Bethlehem Heights, the median sale price reportedly fell close to 6% year over year, and price per square foot trends are drifting downward, a stark contrast to the broad city averages. That's a classic sign we talk about in this series. When neighborhoods within a city are weakening, even as the headline number stays flat or modestly up, it means demand isn't uniform, and that's often a red flag. Buyers aren't just priced out, they're choosing not to bid in weaker corridors. That dampens momentum and can foreshadow broader price erosion. Here's the real question for you. If parts of Bethlehem can see price declines while the overall stats still look okay, how confident can you be in those headline figures? Isn't that exactly the kind of nuance most housing crash stories gloss over? And there's more. Sales activity, although still brisk, shows fewer transactions overall compared to last year, and pockets of slower buyer engagement are emerging. That's exactly the kind of buyer pullback and inventory buildup we flagged in the intro and description. A situation that can accelerate declines once seller expectations finally adjust. So in our countdown, Bethlehem isn't here just because prices are dropping citywide. It's here because hidden cracks in smaller markets are real pain points for investors, buyers, and even agents. And if you miss them, you could be the one holding the wrong asset at the wrong time. Number 9. Reading, Pennsylvania. When you think of a collapsing housing market, Reading might not immediately come to mind. After all, the median home price hovers around $165,000, and on paper, prices appear essentially flat over the past year. But as we dive deeper into the numbers, a more concerning story emerges. According to Redfin, sales volume has declined, and the average days on market is creeping upward, signaling that buyers are taking their time or stepping away entirely. Here's where it gets interesting. A flat median price in a region where most neighboring cities are either slightly up or stabilizing can actually mask a hidden slowdown. It's what we call a relative collapse. Sellers may be forced to hold their pricing steady just to attract interest, meaning that the apparent stability isn't growth. It's a stalling market. That's the kind of nuance that can catch buyers and investors off guard. Now let me ask you this. If homes aren't appreciating and the number of active buyers is shrinking, how safe is your investment? Reading is showing us that even when prices look stable, the underlying momentum has weakened, and in a cooling Pennsylvania market, that's exactly what sparks broader declines. And here's the controversial part. Many real estate experts will point to Reading's affordability and call it a strong buy. But if the market is already stagnating, being cheap doesn't make it safe. Affordability without demand can leave you holding a property that loses relative value compared to stronger, more resilient markets. For buyers and investors, this is a warning. Readings flat prices are deceptive. Beneath the surface, inventory is rising, buyer urgency is fading, and seller flexibility is increasing. All indicators that the city is vulnerable to declines if economic conditions or interest rates shift further. So while the headlines might say prices are flat, in our countdown of top 10 Pennsylvania cities where home prices are collapsing, reading earns its spot because relative weakness matters just as much as absolute drops. And savvy viewers need to see this before making any moves. Number 8. York, Pennsylvania. York might seem like a hidden gem in Pennsylvania, affordable, historic, and full of character. But when we dig into the 2025 market breakdowns, a different picture emerges. Reports highlight collapsing price trends, and it's not just a temporary dip. York is facing a structural slowdown that's starting to scare both homeowners and investors. Here's the key driver: affordability pressures combined with outmigration. Many residents are being priced out, not just by York's own rising costs, but by the neighboring Lehigh Valley and Lancaster markets, where demand and wages are slightly higher. As buyers look elsewhere for better options, York's local market loses urgency, and the downward pressure on home values intensifies. Now consider this. Slower local demand isn't just a number, it's an experience. Homes are sitting longer on the market, and sellers are forced to lower prices or accept less favorable terms just to move inventory. This is a classic signal of a market losing steam, and it's exactly why York lands on this list. And here's the controversial part. Some analysts argue that York's affordability makes it a safe investment, but in reality, low prices don't guarantee appreciation. If population growth stalls and buyers keep leaving for nearby suburbs, even cheap homes can lose relative value, leaving investors trapped. So here's the question for you. If York's appeal is fading, while neighboring markets siphon off buyers, can a home here truly be considered a smart investment in 2026? Watching closely, understanding these local dynamics, and spotting early warning signs is exactly what this countdown is about. Number 7. Altoona, Pennsylvania. Altoona and the broader Blair County area might not make national headlines, but local data from late 2025 tells a worrying story. Multiple housing market analyses and video breakdowns have flagged Altoona as one of Pennsylvania's cities experiencing weakening pricing dynamics, a trend that shouldn't be ignored if you're considering buying or investing here. Here's what's happening beneath the surface. While the median sale prices may not show dramatic drops, industry insiders are reporting longer listing durations and increased discounting on homes. In plain English, properties are taking more time to sell, and sellers are often forced to reduce asking prices just to attract buyers. That's a classic early warning signal for a market under pressure. Ask yourself this: if homes are staying on the market longer and discounts are becoming the norm, what does that mean for the equity of your investment? Altoona's market isn't crashing in headlines yet, but the gradual erosion of buyer urgency signals that value gains are slowing and potential losses are starting to creep in. And here's the controversial reality. Many people still consider Altoona affordable and a safe bet for first-time buyers or investors looking for cheap properties. But affordability without strong demand is a double-edged sword. In a cooling market, being cheap doesn't protect you from price declines. It can simply make the losses more painful when the broader regional trend takes hold. So in our countdown of top 10 Pennsylvania cities where home prices are collapsing, Altoona earns its spot, not because it's making headlines yet, but because the hidden signs of weakness are undeniable. Rising listing durations, discounting, and fading buyer urgency are all pointing to downward pricing risk that savvy viewers need to recognize now. Number 6. Johnstown, Pennsylvania. Johnstown is a city that tells the story of industrial America in decline, and its housing market reflects that legacy. Once a thriving steel town, Johnstown has seen decades of job contraction, population loss, and economic stagnation. These factors make home values extremely sensitive to even modest economic shifts, and in 2025, that sensitivity is showing in the numbers. While statewide Pennsylvania still shows modest home price gains, Johnstown's market tells a very different story. Demand is soft, inventory is creeping up, and buyers are far less competitive than in nearby metros. Even small economic disruptions, like layoffs, interest rate adjustments, or changes in regional investment, ripple through the market here, often exacerbating price softness. Here's the controversial part. Many first-time buyers or investors see Johnstown's affordability and think it's a safe bet. But affordability without strong demand is not a guarantee of growth. In fact, it can mask hidden risk, where buyers assume equity will rise, but the market is too fragile to sustain meaningful gains. Ask yourself this: if homes are struggling to sell and buyers are scarce, how likely is it that a property purchased today will appreciate in the near future? Johnstown's historical trend of population decline, combined with the cooling statewide climate, places it firmly in the list of cities where home prices are vulnerable. That's why, in our countdown of 10 Pennsylvania cities where home prices are collapsing, Johnstown earns its spot. It's a cautionary tale of legacy market weakness meeting a broader market slowdown, and a reminder that cheap homes aren't always smart investments. If you are finding this video eye-opening, do me a favor and hit that like button, subscribe to the Globe Realty, and turn on the notification. It will help us reach out to more people who equip themselves with real insight into real estate before investing. And now, the top 5 on this countdown. Number 5. Erie, Pennsylvania. Erie might be famous for its lakefront charm and historic neighborhoods, but when it comes to housing, the numbers tell a more concerning story. Located in Pennsylvania's Rust Belt, Erie has long faced slower economic growth, declining industrial jobs, and a shrinking population, all factors that make its housing market particularly fragile. By mid-2025, market trends are signaling trouble. Inventories are climbing, meaning more homes are sitting unsold, and bidding wars are becoming rarer. While the median home price hasn't plummeted dramatically, these subtle shifts indicate downward pressure that could quickly accelerate if broader economic conditions tighten. Here's where it gets interesting. Erie's long-term decline isn't sudden, but it's cumulative. When a city loses residents and local wages stagnate, even modest market disruptions can translate into price contraction at the neighborhood level. Buyers have more choices, sellers face longer listing times, and the hidden cracks that many overlook begin to show. Ask yourself this: if a city has been quietly losing population for years, can you really trust that today's affordability will last? That's the controversial truth about Erie. Cheap homes don't automatically mean smart investments. Without robust buyer demand, affordability can quickly turn into stagnation or even losses. In our countdown of top 10 Pennsylvania cities where home prices are collapsing, Erie earns its spot because it represents a Rust Belt vulnerability amplified in a cooling statewide market. It's a reminder that in real estate, context matters just as much as price, and understanding these underlying trends can protect you from costly mistakes. Number 4. Wilkes-Barre, Pennsylvania. Wilkes-Barre, nestled in Luzerne County, is often overshadowed by bigger Pennsylvania metros, but that doesn't mean its housing market is immune to trouble. As part of the Scranton Wilkes-Barre metro area, Wilkes-Barre's real estate trends are closely tied to its neighbor, Scranton. And right now, Scranton's declines are starting to ripple across the region, creating pricing pressure even in areas that seemed stable just months ago. Here's the key dynamic. Wilkes-Barre has historically lagged behind other PA metros in terms of growth and appreciation. That lag becomes a liability in a cooling market. Buyers are increasingly cautious, comparing Wilkes-Barre to more dynamic or resilient nearby cities, and that perception is slowing sales. Homes are staying on the market longer, and sellers are having to adjust expectations to compete. Think about it. If a nearby city is signaling weakness, even marginally, it can change buyer behavior across the whole metro area. That's exactly what's happening here. Wilkes-Barre may not be collapsing on paper yet, but the combination of lagging growth, rising inventory, and cautious buyers sets the stage for further declines. And here's the controversial reality. Many people still see Wilkes-Barre as an affordable alternative to pricier Pennsylvania markets. But affordability in a cooling, perception-driven market doesn't guarantee equity gains. In fact, it can trap buyers in slower-moving neighborhoods with declining demand. In our countdown of top 10 Pennsylvania cities where home prices are collapsing, Wilkes-Barre earns its spot because it illustrates how regional weakness and market perception can amplify price pressure. Even if your neighborhood looks fine today, the surrounding metro's decline could be the warning sign you don't want to ignore. Number 3. Pittsburgh, Pennsylvania. Pittsburgh might still feel like a strong market on the surface. After all, official reports show median home values holding relatively steady. But if you dig deeper into the numbers, a more concerning trend emerges. By mid-2025, over 1/4 of homes in Pittsburgh saw price cuts, according to Zillow regional tracking. That's not just a minor adjustment. It's a clear signal that sellers are being forced to negotiate in a market that's losing momentum. Here's why that matters. Even if headline numbers look stable, the volume of price reductions reveals a cooling market. Buyers are no longer competing as aggressively, meaning homes are sitting longer and sellers are having to compromise. In other words, stability in median price doesn't always mean a healthy market. Sometimes it's just a reflection of stagnation masked by high-value transactions. Ask yourself, if more than 25% of homes are being discounted, can Pittsburgh really be considered a safe market for buyers or investors right now? That's the controversial part. Many still see Pittsburgh as a resilient city with strong fundamentals, but the local dynamics tell a different story. Momentum is slipping and market pressure is real. Pittsburgh earns its spot in our top 10 Pennsylvania cities where home prices are collapsing, not because it's in free fall, but because the underlying weakness is undeniable. Price cuts, slower sales, and rising inventory all point to a market where sellers are increasingly forced to adjust, making it a city buyers need to approach cautiously in 2026. Coming up next, we reveal a city that's showing the fastest visible declines in Pennsylvania, where affordability, demand shifts, and local economic factors are creating even sharper warning signs. Number 2. Harrisburg, Pennsylvania. Harrisburg, Pennsylvania's capital, has long been seen as a relatively stable housing market. But 2025 is telling a different story. According to Redfin, the median home price sits around $155,000, and the city has seen a year-over-year decline of approximately 1.6%. That may not sound catastrophic, but for a market that historically holds steady, even a modest drop is significant. So why is Harrisburg on our list? The answer lies in economic momentum and buyer behavior. Cooling local economic conditions, combined with rising caution among buyers, have slowed transactions and increased the time homes spend on the market. Sellers who previously expected steady appreciation are now forced to adjust prices, creating a subtle but real downward pressure on home values. Here's a question for you. If the state capital, a city with government jobs and relative stability, is starting to soften, what does that say about the surrounding markets? Harrisburg's shift highlights that even seemingly secure markets are not immune to broader regional and economic trends. And here's the controversial perspective. Many investors still consider Harrisburg affordable and low risk. But affordability alone does not guarantee equity gains, especially when buyer hesitation and market cooling start dominating. Homes that once seemed like safe bets could now take longer to sell, or worse, see slower appreciation than expected. Harrisburg earns its spot in our top 10 Pennsylvania cities where home prices are collapsing because it signals that even traditionally stable markets are vulnerable when economic conditions shift. For buyers and investors, it's a wake-up call. Strategy and timing matter more than ever in 2026. Number 1. Scranton, Pennsylvania. Scranton takes the top spot in our countdown, and for good reason. As of November 2025, the median home price is around $190,000, but that number masks a much more alarming reality. Prices have dropped approximately 7.3% year-over-year, one of the steepest declines in the entire state. So what's driving this sharp drop? It comes down to supply and demand dynamics. Homes in Scranton are spending longer on the market, about 40 days on average, and buyer activity hasn't kept pace with available inventory. That mismatch creates real downward pressure on prices, turning what might have been modest cooling in other cities into a more pronounced decline here. Here's the controversial part. Some investors look at Scranton's affordability and see opportunity. But affordability without strong buyer demand can quickly become a trap. When homes take longer to sell and sellers are forced to drop prices, the perceived value of these bargains can erode faster than expected. Ask yourself this: if buyer demand is weak and inventory continues to rise, how confident can you be that a home purchased today will retain its value in a year or two? Scranton is a stark example of how quickly a historically stable market can shift when economic momentum slows and buyer interest wanes. That's why Scranton sits at number 1 in our top 10 Pennsylvania cities where home prices are collapsing. It's a cautionary tale for homeowners, buyers, and investors alike, highlighting that even moderately priced, historically stable markets aren't immune to decline. If you're serious about navigating Pennsylvania's cooling housing markets, pay close attention to Scranton, because it's showing some of the clearest warning signs of a statewide downturn. And there you have it, our countdown of the top 10 Pennsylvania cities where home prices are collapsing, worst housing markets in Pennsylvania. From Scranton's sharp 7% decline to subtle but telling slowdowns in cities like Bethlehem and Altoona, the data makes one thing clear. Not all Pennsylvania markets are created equal, and affordability doesn't always equal opportunity. Across these cities, we're seeing common warning signs: rising inventory, homes spending longer on the market, price reductions, and weaker buyer demand. Whether you're a first-time buyer, a seasoned investor, or a homeowner thinking about selling, these trends are critical to understand before making any moves in 2026. Here's the takeaway. A flat median price or a seemingly affordable market can hide serious weaknesses. The cities we highlighted show how regional economic shifts, population trends, and buyer behavior can turn perceived opportunities into risks, sometimes faster than you'd expect. So, what does this mean for you? Stay informed, watch the trends closely, and think strategically about where you buy or invest. Pennsylvania still has strong markets, but ignoring these warning signs could cost you years of equity or missed opportunities. If you found this countdown valuable, make sure to hit the like button, subscribe to the Globe Realty, and turn on notifications. We bring you the latest housing market predictions, crash warnings, and real estate investing insights to keep you ahead of the curve. We want to hear from you. Which of these cities surprised you the most? Are there markets you think we should watch in 2026? Drop your thoughts in the comments below. Let's start the conversation. This is the Globe Realty, helping you navigate America real estate, one city at a time. Thanks for watching, and we'll see you in the next one.